And on to this story now, Exxaro Resources has released the latest annual financial performance for 2022. In what was a tough trading environment, the miner posted group revenue rising 41% to 46 billion rand from 32 billion rand in the previous year, while earnings before tax and interest actually rose 78% to 19 billion rand. Dr. Nombasa Tsengwa is the group CEO at Exxaro Resources, and she joins us now. Dr. Tsengwa, thank you very much for your time this particular afternoon. I want to get into the company performance, but want to start with the fact that you joined as CEO in August last year. It's been quite a difficult year. It's been 2022. How has it been for you having joined the company in that particular hot seat?
Good afternoon, Xolani, and thank you very much for having me this afternoon. You actually reminding me about a day, which is the 1st of August, and it actually feels like 5 years ago because a lot of things have happened in between. Really busy tackling the challenges of the business to the extent that, time just went by quite quickly, and happening at a time when a lot of things were happening in the markets, in terms of volatility, in terms of all sorts of challenges that we all know, the energy crisis. So we really have been locked into a lot of challenges and thinking and analyzing, positioning ourselves. So that's what it has been, and it really feels like a long time ago. But thank you for asking.
Dr. Tsengwa, for the company, for the 2022 financial performance, there are a number of areas that are continuing to worry the market, and we saw from the other peers as well that the logistical challenges are still there when it comes to coal exports from your side. Coal volumes decreasing by 32% due to those Transnet freight rail constraints and linked to the lower rail performance. That has been a big part of 2022 and this performance.
Absolutely. I mean, you will see the numbers that the Mining Council, of South Africa is reporting are huge numbers in terms of, revenue losses and volume losses, from our peers in the mining industry. And as you can see in the results that we reported, yourself, you just said that we have been set back 32%. Of our export volume year on year. So indeed, it is a challenge. It's a challenge, though, that, we are not throwing our hands in the air and say, look, we can't deal with the matter. We've got a really great team led by a very able individual who is really looking at alternative options to evacuate coal, either to RBCT through trucking. And we know trucking is extremely expensive compared to the alternative of using rail. So that's one option that we've used. And we know that trucking is not profit. It's going to actually squeeze us in terms of the cost of trucking and its impact on the bottom line. So it's something that we do because we have to. We have to do it at the right price. And at a certain price levels, trucking becomes really very destroying. The other alternatives that we do look at is alternatives such as the Maputo, and that also is having its own challenges. We know Maputo has got capacity of about 2 million tons, and all of us do want to use that conduit. So it's a real challenge, and it's a challenge that needs to be tackled with lots of elegance, and a challenge that needs to include the industry and other private players at large as a solution.
Dr. Tsengwa, the Exxaro Resources miner, you were a part of many companies in the coal sector in South Africa that benefited greatly from the higher coal prices in the export market. But in the near term and in 2023 in particular, you are predicting and we are seeing those high coal prices tapering off. What kind of an impact will that be, and what's the outlook for the group itself in 2023?
Look, we are in a very fortunate position at Xolani as Exxaro Resources in terms of our product mix, which actually comes in as an advantage when it comes to price realization against the API4 index for thermal coal. So our starting point is quite strong. And you will see what we've just announced, just to demonstrate the strength of our product mix by virtue of high volumes of RB1 in our mix. We were able to realize 93% on average against API4. So the strength of high prices coupled with the strength of our quality, which is really, as I say, putting us in a good stead. So given the high quality markets out there, Europe being one of them, and we've really played quite well in the European market. Our tons lifted from, as a country though, to about, I think it's probably about 40 million tons that went to Europe in total. I can be wrong on this number, but even our own numbers have lifted. That is a high quality market. The demand is still there. Yes, we do see some tempering off in terms of the demand on the back of high volumes of gas in Europe. The wind generation is doing quite well at the moment. And the winter, was not as bad as they had expected. So we do see that lowering of actually of the price. But again, I go back to the demand. Europe will always look for high quality coals. They will always obviously look for certain aspects of the coal that really match their needs. And we have really not seen much regression in this regard, even though we do have a fear of being dependent, on a market like Europe, which is really thematic, single theme. We just want to diversify away from the Russian coal. So we do want to pursue other markets, and thank God, looking at where the demand is, we think that we'll be able to play quite strong. The Indians are opening up. We see also in some of the Southeast Asian countries opening up. Japan is another space where we often go to. They are a high quality destination. In that regard, we think that with our amount of coal, which is not large tons, so in terms of volumes, we really see ourselves playing quite well between these different markets and also playing in our Indian market. On pricing, yes, it will cool down. Why? Because Australians that were impacted by La Nina, your Indonesians who also are the strong suppliers who also were impacted by La Nina are also now, opening up and getting their coal out there. So the prices are going to dive quite a little bit, but we think that maybe between $110 to probably about $120 we're closing in this year.
Dr. Nombasa Tsengwa, the Group CEO at Exxaro Resources, thank you for your time this afternoon. Exxaro Resources, of course, are seeing coal revenue increase in 43%, largely driven by their commercial mines.